Most people think you need some crazy strategy to invest real money, and you don't. You just need a plan that works. Even when motivation is low and markets can be extremely boring, you gotta stick to that plan. So in this video, I'm breaking down my exact plan to invest $40,000 in 2026 and how you could apply the same framework at any income level. So how much do you want to invest in 2026? Comment down below. Now, one thing I want to make very clear in this video is this money is not invested all at once. This is invested throughout the year, and this is not me trying to brag or flex. There are always going to be bigger fish out there. I might invest 40K. There's another 27-year-old out there investing 80K or 100 or 200K. And that goes for any income level. So this is not me trying to flex at all. This is just me being transparent with you guys in this goal of $40,000 that I'm trying to invest and how I'm going to reach that. And at the end of the day, this comes from living within my means, having that consistent income, any type of bonuses, and it's mainly just discipline that is going to get me there. And one thing I have to emphasize is I did not start out investing this amount. I wasn't even close to investing this amount. Like 5-6 years ago, I was investing maybe $100 a week or, $200 a week. So it'd be like 3K a year or 5K a year or 10K a year. It wasn't until the last couple of years where my income started to grow where I could start investing more money. Now, if I want to invest $40,000 this year, that means that every month I need to invest $3,333. And I am paid bi-weekly, so I will have a couple of months where maybe I get above that average because of the extra paycheck. But one of the main things I need to keep an eye on is my spending, because if I spend a lot of money, if I'm done with my money, or if I'm not planning things ahead of time, then I'm not going to hit this goal. It's just that simple. And one of the key principles to my investing strategy is my goal is not to maximize short-term returns. I don't care if this money does well this year. All I care about is that I can invest this amount of money, and I know that if I'm consistent, my money is going to grow long-term over a 5, 10, 20-year period. The goal here is to invest consistently regardless of what the market does, even if it goes up or if it tanks and it goes down. I want to avoid panic decisions. I want to be very consistent about my investing, and this is going to help me build momentum along the way. And one of the key things when it comes to investing is I'm not sitting here trying to buy individual stocks. I'm not even trying to really beat the market. As long as I get the market return, I'm very happy with that. But I truly believe that when it comes to investing, it's mainly psychology and discipline. It's really just coming down to how consistent you are and can you hold your own during the storm. If the market drops 30% this year, are you going to sell your stocks? Are you going to panic? Or are you going to keep investing consistently? And that's one thing I actually love about investing. You don't have to be the smartest person of all time. You just have to be very consistent, and you have to be a little bit calculated as to what investments you pick. But for me, as you guys know, if you watch my Road to a Million net worth videos, I mainly invest in the S&P 500. Most of my portfolio is in that, but I do have a little bit in SCHD as well as VUG. Now, these are all ETFs. It's basically just a basket of stocks if you've never heard of that. And so that is the current setup of my portfolio. Now, let's actually break down the buckets in which how I'm going to get that $40,000 invested. The first thing I'm going to try to do this year is only put my money in the S&P 500. Now, like I just said, my money is invested into 3 different ETFs, VU being one of them, which is the S&P 500, but I also have SCHD and VUG. I think I'm just going to let them do their own thing and see how they grow over time. SCHD gives me the cash flow and the dividend income, and then VUG is more tech focused, so I do get capital gains if we continue to see this tech bull market. Now, in 2025, I invested a little over $33,000. So in 2026, in reality, I actually only need to invest $31,600. And let me explain why and the math behind that. The main reason for this is because I just got my 401k match, which they're going to match 6% of my salary. If I make $140,000 this year, that is $8,400 in my 401k match. So if you take the $40,000 minus that $8,400, you get $31,600. So I actually only need a monthly average of $2,633. So that 401k match is going to help out big time. And that is one thing I would highly recommend utilizing when it comes to investing is if your company offers a match, make sure you are at least getting the match there, because like I said, it's free money. I invest $8,400 and my company matches that $8,400, which is great. Now, the thing that is interesting with my company's match is I actually won't see that money until the very end of the year. So December, I will have a very large deposit, which is the 401k match kicking in. But throughout most of the year, I'm still going to just be putting 6% in. Maybe we'll get a raise, hopefully sometime soon. We'll have to see. But in the meantime, we're going to stick that 140k at 6% there. And in regards to how I prioritize my investments, I'm definitely putting that 6% in the 401k. And then my first goal here is to max out the Roth IRA, which is going to be $7,500. But I don't think I'm going to max my Roth IRA this first month. It'll probably take me, I'm assuming, 3 or 4 months. So after I put in the 6% of my salary, which is $8,400, then they're going to match it. That's $16,800. And then we max out the Roth IRA at $7,500. This means that left over, I need to invest $15,700 into my brokerage. Now, like I said, my goal this year is to invest entirely entirely into the S&P 500. So whether that is through my 401k, just buying the S&P 500, or just buying VOO or VOO, like what I've been talking about already. And although it seems extremely boring and the average annual return is around 10% when it comes to VOO, I think that this is a great strategy long term, regardless of what the market does. And my goal is to invest as much as possible as soon as possible. And a lot of people may hear this and go, damn man, that is super boring. I do not care about you investing into the exact same thing bi-weekly. Like, give me a break. And I get it, honestly, it's not an exciting thing, but it's not supposed to be exciting. It is supposed to be consistent because I'm here to build real wealth. Like I said, I'm not focused on short-term gains. I'm not even focused on medium-term gains. I just care about the long term here. And I do feel like when you invest consistently, it removes emotion out of these things. And dollar cost averaging, it is a form of very strong discipline. It is not necessarily a strategy. Obviously, we all know lump sum beats dollar cost averaging, but I am just trying to invest as consistently as possible. And I'm not ever going to try to sit here and time the market because, like I say in a lot of videos, time in the market beats timing the market. I don't care if the market drops 5%. I don't care if it goes up 20%. I don't care if it drops 40%. I'm just investing consistently. I'm not trying to sit here and buy the dip and then sell out when it gets a good rally going. It's just all about this long-term consistency, because having rules and a strategy, that beats the emotions. When people tend to make the most mistakes in investing, it is when they are the most emotional. And people tend to get very emotional when they see their portfolio dropping 10, 20, 30%. And a lot of people could sit here and go, well, of course you're saying that, man. The market's had back to back to back green years that have been great, but are you actually going to invest when the market drops? Yes, I absolutely will. I did it in 2020. I did it in 2022, and I will show you guys again this year if it were to drop. And so I'm not trying to time the market. I'm just trying to be consistent. And I know I'm beating the hell out of this word, but it's just the truth. That is how you really build wealth here. Now, what I'm not doing in 2026, and I feel like this is very important, is I'm not going to try to day trade. Even if I get a ton of profit off my investments, I'm not going to sell and then start day trading the money. I'm not going to start buying options hoping that they go to the moon and then I can make a ton of money and turn my $100,000+ portfolio into $1 million overnight. That's not what I'm trying to do. I'm not going to use any leverage. I'm not going to go buy the next hype stock. I really do not care. And I'm definitely not going to be chasing last year's winners. Like I said, I don't even own any individual stocks anymore. I feel like one of the hardest things that people don't understand when it comes to investing is you just have to kind of sit on your ass. Like, if you don't make a ton of decisions, if you're not constantly buying and selling and you hold very long term, there's a good chance you'll do well, especially when you're holding really high quality ETFs. Now, what could actually go wrong here and how do I plan on managing these things? Now, the first thing, like I said, is the market downturn. The market could have a horrible year. I'm very surprised we have had back to back to back super green years. It's not like we've gone up 3%, 5%. It was like 20 something percent, 20 something percent, 16 or 17%, like really big gains the past couple of years. And so if we did see a flat year or a pullback, it really would not surprise me, but I'm not trying to predict the future, which is why I'm just dollar cost averaging consistently. So yes, the market could tank. One of the key things if the market does drop, or if we were to go into a big recession or a financial crisis, is trying to keep my job. So I am trying to be as valuable as possible on the team that I work on and at my job. That way, if layoffs come around, they think to themselves, hey, we cannot get rid of this guy. We need him. And I think that's a very important thing to try to do, especially if you're a little worried about the economy. Now, if we were bouncing back and if things were all good, then maybe I wouldn't have to stress about that as much, but it is something I try to do, is work as hard as possible. And although I don't believe that these corporations care about me, I do think making yourself extremely valuable and hard to get rid of is only going to help you if we do go through any type of financial crisis. So that is the first thing that can happen. The second thing that can happen is lifestyle inflation. I even talked about that, I think not in the last video, but the one before. I need to make sure that I'm planning better when it comes to my money, whether that's planning vacations or if I'm going out and I'm getting drinks, making sure that, I only get one or two. I'm not sitting there buying a bunch and I'm not just, throwing money down the dump. I want to be very intentional about my spending this year, whether that's going out to eat, whether that's traveling, regardless what that is. And I am very happy with the salary I make, and I'm very grateful for the salary I make. Last year, I didn't get my bonus. So this year that should be kicking in February. I will find out actually pretty soon. So we'll have to see there. And so I do need to be very smart about when I get that money and what I'm going to do with it entirely. But overall, lifestyle inflation is something I want to avoid, and I need to make sure I'm holding myself accountable. That's part of the reason I actually created that Road to a Million Net Worth series. That way I'm looking at my investing rate each month. Because if one month it's at 25 or 27 or 30%, and then the next month it drops to 15%, that's basically my way of saying, damn, you got to chill out on the spending. You went a little too hard last month. And so that is one way to hold myself accountable. That way I do not let lifestyle inflation get the best of me, because it typically tends to happen very small over time. It's not like it happens overnight and all of a sudden you're just spending money just left, right, and center. It's typically you spend a little bit and then a little bit more and then a little bit more. And before you know it, your monthly expenses have gone up quite a bit. So I do hope that this is very motivating, but I know that also also starting out, you're sitting here like, dude, I'm not even close to investing 40K. I'm only going to invest $1,000 this year, or 500, or maybe 3,000. So why does any of this shit you're saying even matter to me? And honestly, that is a valid point. But one thing I want to make very clear is it's all about your investing rate. And over time, as your income grows, if you can maintain that investing rate. Like I said, when I was 21, 22 years old, I was not investing anywhere close to $40,000. I was investing like $3,000 or $5,000 a year. But I knew that over time, if I could grow my income and try to keep the same investing rate, where I'm basically looking at my investments divided by my after-tax income, let's say I kept that at 20%, and then your income goes from 50 to 100K a year, you're going to be investing a lot more money. So it's really about trying to keep that investing rate around the same percentage and then building really good habits, because I feel like it's a lot better to invest consistently than to save up a little bit of cash and then just lump sum a bunch of money hoping that the market drops at any time. And I know a lot of people disagree with this strategy, but for me, this is just what works. And I'm not a financial advisor. This isn't professional financial advice, but like I said, it's worked for me, and I've grown my portfolio to $140,000. So it does work very well. And when it comes to investing, it is better to start now than to be perfect. You're going to make mistakes at the beginning. You're going to make mistakes along the way. I even occasionally make mistakes these days, but it's all about starting out, being consistent, and learning from those mistakes and moving on. And when it comes to your investing rate, try to just keep it at a certain percentage or around a certain percentage, whether it is 20% of your income or 25 or 15, whatever that looks like for you, and try to keep that super consistent. And then over time, as you see that consistency, try to figure out ways to grow your income if possible. And when it comes to my Road to $1 Million Net Worth series, the portfolio is a very large part of it. That is most of my net worth. It's around 61%, I think, if I remember right. And this year is just one stepping stone to get to that $1 million mark. I'm not going to have some single year that's going to make me super rich. I really do believe that the direction you're going in is a lot more important than the speed you're going in. And so regarding my Road to $1 Million series, the goal this year is going to be $40,000. If we can hit that, that would be great. Like I said, that 401k match is going to kick in December. We also have 2-3 paycheck months. So that is going to be, I think it's July and December. I could be wrong though, but those will also help because I typically budget on 2 paychecks. So if I get an extra one, that's also going to help with my investments. We're going to throw all of our money into VU. We're going to get that 401k match. We're going to max out the Roth. If we have a lot of money left over with the bonus, we'll just have to see. That's the goal though. And like I said at the beginning of the video, and I will reiterate again, this is not me trying to flex. This is not me trying to brag. This is just the situation I'm in and how I'm going to try to reach my goals. And one thing I try to do every year is, if I can't necessarily increase my income, if I could find a way to decrease my expenses, that way I can find a way to invest more and more money each year. So we hit $33,000 last year. If we could hit 40K this year, that would be great. So that is the plan. That is it for me. I hope you guys enjoyed this video. If you did, drop a like down below, hit that subscribe button. I'll see you in the next one. Peace.